Our sponsors today, Yadi, Kulka, FIA Capital Partners, San Ward Cascignano, and U.S. Pavement.
This is our panel, and I want to thank our sponsors. And I know people will get sick of me saying this, but I'm going to continue doing it because they are the most important part of putting these together, because without them, these things don't happen. I want to thank Yadi, Kulka, FIA Capital Partners, San Ward Cascignano, and U.S. Pavement. I thank them very much for participating and supporting these events. And they also will be supporting all three series of this, or three parts of the series of New York City, or New York, I should say. September 22nd, we have New York City event, and September 29th, we'll have an upstate New York panel event. So anyone that cares to attend, you're welcome to. That is me, of course, Rick Kaplan. I'm with the New York Real Estate Journal and the New England Real Estate Journal. I host, produce, MC, and talk a lot for every event. So if we're all ready, I think we're just about to begin. We just have to switch over a couple more people, and I think we'll be good. And like I said, anyone that wants to connect with anyone during this event, please do so by putting your contact information in the chat box. And if you have any questions for the panel, please enter those into the chat box as well. Now I'd like to introduce our moderator, who is Eric Alexander, is the director of Vision Long Island. It's early for me, so. A regional smart growth planning organization. Eric has nearly 20 years experience in housing, transportation, community development, and coordinating successful community projects. Specifically, Eric has been proponent of smart growth planning and mixed-use development through advocacy efforts on federal, state, county levels, while working with municipalities to develop and implement smart growth policies, regulations, and projects. All told, his efforts at Vision Long Island have resulted in acting as a catalyst for over 55 private and 60 public smart growth projects. I give you Eric Alexander.
Thanks, Rick. No, old bios are brutal, but thank you for introducing. No one needs an introduction. For me, we're out there on Long Island, been busy for a long time. It's most important that we come together, and it's great that you placed this forum, put this forum together. I'm glad to see a lot of new faces, some old faces, and some great commentary in the chat. We're going to get some good Q&A going today. I definitely thank the panelists and sponsors. Michael San's on here. Know him for a long time for San Baker and Cascignano, Ward Cascignano. David Shorenstein, we're getting to know with Hildreth, Leo Farrell over at NAI. He's got a long record history in the real estate industry, and these guys are going to bring a lot of knowledge to us, and it's going to be a great exchange. They put together some great questions for me to fire away, and I know we're going to get a lot of great questions from the folks in the chat. I'm glad you got some great sponsors here, Rick, and thanks for everybody tuning in. I mean, I know another Zoom call, another virtual thing. A lot of us want to see each other in person. I know when this is over, we're going to have a hell of a party. But I'd be remiss if I didn't thank the people who support our organization, Vision Long Island and our Main Street Alliance. I got to shout out to my board member, Sean Cronin, who's on this chat as well with Cronin, and Michael San has been fantastic too. Your firm, Michael, has been supporting us. Members of your team on here too. So I'll be quick in the beginning, and we want to get to these guys. The theme today is the state of the market in Long Island. And look, a couple of us did this last year, and who knew we'd be where we are? I mean, Nostradamus couldn't have picked this, right? So, we've been 180 days plus into this coronavirus. I still say it's a shutdown because lots of places aren't open yet, or they're open halfway. So look, just to backtrack, January this year, we had our Main Street Alliance, 20 downtowns were presenting very bullish plans for the year. There were development projections of a lot of growth in our downtown areas. 98 of the last 116 public hearings had more community supporters than opponents for downtown projects. We have 10,000 units of transit-oriented development in the hopper on top of the 15,000 that were approved. So it was a bullish year. Coronavirus hit, and what's happening? Main streets are hurting, jobs, small businesses have been hurting the most. The rules are rigged against them towards the big box stores. There's been a lack of corporate philanthropy. Some people call it hoarding. Some people say it's just a lack of corporate philanthropy right now. Whatever you want to call it, that's hard on communities. There's a lack of outreach on government programs. I'm still going through some bad news. Confusion, chaos in the local community, food insecurity. These pantries have 3 to 10 times increase in need. And then the rent is looming over everybody. And those of you on either side of this, on the commercial side and the residential side as well, looking at arrears and months that at some point, there's a challenge here. The good news, TODs is still strong. New construction, I've been to 6 job sites in the last 2 weeks. And the community's rallied around their small businesses. And we'll talk about today, but there's this New York City exodus that is driving development and growth on Long Island, and we've got a plan for it. So those are some, so there's the good, the bad, and there's the now. The movie theaters aren't open. Live theaters aren't open. Indoor dining needs more to get through the winter. When you loosen regulations, I can go on and on and on. I'm going to stop. Let's get to our panel. We got a lot to talk about today. So let's start up with Michael. We're going to allow each panelist to kind of introduce themselves and kind of give their projection, their forecast, and then we're going to get to some questions. Then we're going to get to some questions for the chat, and then we'll close out with Rick. So, Michael, what's the state of Long Island? What's happening?
Thank you, Eric. And thank everybody, and thank Rick for the opportunity to join the group this morning. It's a great discussion. I wish I knew the state of where we were going and what the future holds for us. But I do have one overriding observation, is that I think we're at a very important moment that we can seize a lot of opportunities. There are a lot of things happening that make us realize that what we were doing wasn't really working correctly. And the things that we thought were going to happen are not happening. So it's a great time to reevaluate. Just a couple general observations. For instance, I think the pandemic has changed everyone's outlook on long-term retail, long-term malls, how we're going to deliver goods and services, requirements for energy sources in the future, hardening the infrastructure, healthcare, more education and healthcare uses in the area. And I think it's also indicated very clearly that we need more housing choices in different places and a variety of housing. And I'll mention more about that later, but one of the unique things is that we now are seeing a resurgence of interest in single-family homes. Now, for a while, everybody was thinking that people wanted to live in PODs, which is still true, and people wanted to live in multifamily type settings or multifamily type community settings. But now it seems that people are interested in improving their homes. They want to stay in their home. And there are a lot of people who are moving out from the city to Westchester and Long Island and want to live in a single family home again. And that's an interesting dynamic that I think we have to account for. I don't know that we actually have it, a full understanding of it, but there's lots of dynamics, and I think we have to be cognizant that we're in a changing world and take the opportunities as they're presented. So that's my opening observation.
All right. So, okay, good stuff to chew on there, Michael, as always. And Michael's got like a list of like 5 or 6 questions that, are going to keep us going for the next hour, but we've got some other ones here too. Leo Farrell, getting to know you on the office commercial side. You got a lot of background experience, and clearly, you got some projections on where we're going.
Yes, good morning, everyone. Leo Farrell. I'm a managing principal at the NAI Long Island, and we're in the mainstream of the office, industrial, commercial market, Nassau and Suffolk, primarily in Suffolk, but we're planning to open a Nassau office. We recently picked up the NAI franchise. We were Coldwell Banker Commercial, and the NAI, it's, in our opinion, a much stronger brand, and it became available. So we recently rebranded, and we're pretty excited about that. And, we're based in Islandia, but we have Nassau and Suffolk County territories exclusively. So our plan is next year, if everything goes well, to open a Nassau office and expand our presence in Nassau. So I've been coming in, I guess, since the beginning of May into the office. I was alone at first. I mean, April was just, COVID and everyone was home. And slowly everyone's coming back. And now after Labor Day, basically everyone's pretty much back at some capacity coming into the office and obviously taking all precautions necessary. But we've seen it's surprising. We kind of didn't know what was going to happen with the market. And, pre-COVID, the industrial market was very hot. Prices were steadily increasing. Office market, not so much, but things were kind of going along, nicely. And then COVID hit. So we were, quite concerned about what would happen. And it's interesting. I mean, the industrial market is really, it's like red hot now. There's more customers, there's no space. It's challenging to find space, I should say, in leasing and sales. And like you say, it's that push from the urban, like New York City, onto Long Island, Brooklyn, Queens. A lot of times they'll leapfrog Nassau and come right out to Long Island, especially for land. There isn't a lot of land in Nassau, so we've seen a tremendous increase, demand for land and industrial. The office market's been kind of funny. I mean, a lot of people still aren't back, so we're not quite sure how that's going to go. And it's kind of like 1 week at a time here, but I can tell you, my contemporaries in the business, other brokers throughout the island, Brian Lee's on here, and he can attest to it. It's been very busy in the office, we'll see, but industrial's been red hot, and that's not necessarily what we would have expected. And the pricing on office industrial hasn't really changed. It's only been 6 months. We haven't really seen that type of change, but we're kind of, like I said, taking a week at a time and see how it goes going into the winter and next spring. Hopefully we'll get this vaccine, and next spring try to see if we get back to normal. But for the moment, that demand coming out to the suburbs, I mean, obviously the residential and the commercial seems to be following it, and it's been very very busy that way. So that's how I see it for the moment.
Thanks, Leo. No, that's great. Good to understand those observations in the industrial piece. We've heard that, but it's good to get that reinforced. That's there's strong demand there for that, and a number of other things too. So, hey, let's get over to David. David Shorenstein. He certainly has his finger on the pulse of the real estate market as well, on the investment side, other side. So, David, getting to know him. So, tell us about yourself and what you see happening.
Sure. David Shorenstein, company's name is Hildreth Real Estate Advisors. Started buying aggressively in Long Island starting in 2018, 2019. I owned over 160 buildings in Manhattan, Brooklyn, Bronx, and Queens. And really, once the laws and administration started changing in 2016, unwound that entire business and started buying in Long Island, in Mineola, Riverhead, towns I just thought had rent growth potential. And, I think I'm very lucky that New York has really been going down and Long Island has really been going up. I just have seen vacancies don't last very long in Long Island. Rents do go up in certain areas. I think there's, I just bought a self-storage facility. Very happy with that. Looking for more of those opportunities. I just think I think there's a world of opportunity out there. I think there's a lot of inefficiency in Long Island. A lot of these owners are, willing to talk, willing to listen to offers, and willing to transact. Very different than Manhattan. It's a great market.
All right. So thanks, David. So this is interesting. We have three very different perspectives. You got one gentleman who's been practicing law on the public side and the private side and is looking at real estate from one perspective. And Michael, you got Leo, who's got the perspective on office and industrial markets. And then David is a relatively new investor to Long Island, sees Long Island on the upswing, which sometimes more jaded or grizzled members of the real estate community out here, always look at the struggles and grinding it out, and it's interesting to get your take, which is fairly refreshing and positive. So in a sense of opportunity, and I really like that. So, all right. So three have different takes on the world. So now that we've kind of grounded where we are, let's take this to where do you get the crystal ball out to the degree you can through this crisis and tell us, two things. One, what are the sectors you think that are going to drive the economy moving forward out here? A, and then B, what are the impacts to some of the other sectors? There's winners and losers in this game. So maybe give us, feel free to share, what's going to drive our economy and then what's going to be weakened and may need to be salvaged or supported in some ways or shifted or changed. I don't know, Michael, you want to start up?
Sure. As I mentioned, I think housing is going to be a big driver of the economy going forward. The old phrase, I guess, that was coined by Robert Moses, perhaps, or attributed to him, build it and they will come. So my view is if we have good housing options for people, then Long Island's population will benefit. We'll be able to attract talented people here, be able to keep talented people here, and be able to grow different sectors of the economy. But to me, you can't really do that unless you have good housing for people. So our firm, thankfully has been given the opportunity to represent a number of developers in different types of housing. And we've also had the opportunity to represent various municipal organizations and municipalities that respond to the application requests for housing. And I see it that if we provide a lot of different opportunities, mixed use, transit-oriented development, as I mentioned, not give up on the single-family home, because there's a lot of interest in single-family home, we'll be able to attract and keep good people, and that will spur economic growth. The other two big areas I think that are going to be drivers are healthcare. We've clearly learned the value of having great healthcare on Long Island from a lot of different providers. So that's really important, both the large institutional type healthcare facilities and then smaller facilities such as the Go-To Health type of or 24-hour healthcare providers. Those are very important for people. And the other component I think that will be important is education. Education to keep people here, to keep people employed, and to build a great workforce. So those to me are the three big fundamental areas that will spur economic growth.
And do you see any shifting, any weaker markets? I see what's driving things forward, but Michael, is there anything that's weaker on the landscape?
Well, I think the retail is weaker. The hard brick retail is weaker. I don't think it's going to go away, but I think our COVID pandemic has really accelerated the trend toward the Amazon type deliveries, the big box stores, the places where people can buy in large quantities and feel comfortable that they have a supply of goods and food. So I think it's really accelerated the trend away from the mall type and the strip mall, the big mall and the strip mall. I saw someone mentioned on the chat just now the possibility of housing in the malls. Absolutely, I totally agree with that. I think that the malls could be repurposed, as well as a lot of the strip malls. A lot of the strip malls and developments are being changed over to have medical uses. To me, medical use is now the new retail. The way we used to grow retail, that's medical now. It's delivering the medical services in a retail type setting. And I think that's a big driver in the future.
Thank you, Michael. Leo,
I can follow up on that.
Yeah,
with
please.
Don't mean to interrupt you, but
No, you're next.
Seeing a sea change with the the Amazon effect. Definitely retail is major changes there, and we're seeing that. That's also reflective, like I say, the industrial market's so hot because we're seeing it's not just Amazon, it's Walmart's. The last mile type of delivery.
Yes.
And they're looking for space now out close to the Hamptons, and Amazon's really on the move.
Leo, what else do you see? You mentioned in your opening comments that industrial's strong right now. Moving into the future, what's your crystal ball? I think he kind of froze.
Leo froze, I think. Technology.
Maybe we'll run over to David.
Well, I see that on the smaller mom and pop stores, these places there's still demand for the barber shop, the nail salon, the pizza store. Those things are
services, yeah,
always going to be here to stay, especially in good quality walkable locations. And that's why I really focus on transit-oriented ones and ones that are just in irreplaceable locations where you can't build another one. So those small service businesses, the deli, maybe it's a local furniture store, those aren't really getting affected by Amazon. So that's what I personally like and focus on.
David, we should talk. I love what you're saying from the perspective of our work. Those are our Main Street stores, the bread and butter, really keep the character and the quality of life of Main Streets for folks. But I'm glad to see your perspective is that they're still valued moving forward, because right now a lot of them are under siege. They're just feeling really hurt by this virus. So it's very heartening to hear what you have to say. What's weaker in your mind? What areas of Long Island do you obviously see a lot of opportunity here? What do you choose not to invest in, or you don't see as strong?
Well, I focus on. I like properties that have lower real estate taxes, because taxes can just destroy the investment from the get-go. you know, obviously if the rents are above market, it's got to have low rent and low taxes, and you're getting it at a good basis. So I'm extremely specific in what we do. So we're not going out there and buying everything, but it's got to fit certain criteria. But a lot of these things, you know, you have taxes of $100,000 on a small center with 5 stores, and you'll never be able to push any of that back on the tenants ever. You're done. You're underwater from day one. So that's really the first thing I look at.
Thanks, David. Leo, we lost you. You got frozen. So yeah, give us a flavor.
Can you hear me, or?
We hear you now.
Okay, sorry, I don't know what happened there. I apologize. I don't know where I left off, but I was
Start from
talking
the beginning.
we you know, a sea change in retail, and we've really seen the Amazon effect, where it's going from you know, the retail stores to warehouse and last mile delivery. It's not just Amazon, Walmart, Target are all getting into it. And, you know, Amazon's on the move. They've leased quite a few buildings on Long Island already, and they're also looking for parking and charging stations for the vans. They want to go, you know, carbon neutral, you know, within 10 years. So that's a big part of it. So we really, you know, that seems to be driving the market, and ancillary businesses supporting that. That seems to be a driving factor of, you know, keeping the industrial market hot. Well, another thing, you know, with is the self-storage is hot now, and it kind of follows along with the apartments, all the apartments that are being built, and people moving, and single family, even people coming out of the city and putting stuff in storage. So that's good for David with his self-storages, but you know, we just see a very robust, you know, commercial market at the moment.
What's weaker though, from your perspective? Are there any areas that you're predicting?
I mean, the office space it seems to be weak. The office leasing. I mean, you know, some companies are just, you know, the employees are just going to permanently work from home. So, and then it's, you know, how much space are you going to need then? And then, you know, when your lease comes up, are you going to downsize? But the office market's been, you know, if I could say anything, it's been not necessarily weak, but changing. And, you know, it's going to be interesting to see how it ends up. You know, certain businesses, they need everyone in the office. Other businesses, you know, people can work from home permanently. And also, I've heard that coming from Manhattan, too. People just aren't going back.
It's Leo, interesting observation. We've repopulated our office, you know, to the extent appropriate and allowable, with staggered hours and times for people.
Right.
And we've found it's been a huge boost to everybody's productivity, their morale, and how they feel about the firm and our business. You know, we're very fortunate. We planned ahead for the remote, and we were fully operational seamlessly. But it was still difficult to work remotely for people. You know, when you have children at home and you have to do the virtual education, that sort of thing, and just getting used to the logistics of it. But I have found that being back in the office has given everybody a sense of unity and morale, and we all sort of got tired of Zoom calls all the time with different practice groups. So I actually think that the hard and fast office use is going to continue, maybe a little bit differently with more flexibility. But we're glad we have a space here in the building that we're not tight together and we're able to spread out. And that extra rent is probably worth it in that regard. Don't let Scott Reckler hear that, please. But I don't know how, you know, some of the office owners feel about it. I know Phil Walker's on the call, but I see offices as actually continuing. It may take a little bit of re-engineering, but I do think the office market's gonna stay in place.
Yes, I mean, I agree with that completely. Just at the moment, it's been, a little bit weak and uncertain. But I
Right.
can attest to that. I mean, being one of the principals of the company, like I've been coming in since, beginning of May, and just more or less just safely, of course, but to more or less set an example, if I'm not here, then other people are coming in. So if I'm here every day, I think it's people are more inclined to, employees or brokers are more inclined to, to come in if you set the example. But, I think once we have the vaccine and get through this, and hopefully in the spring, we return to normal here. And at that point, the office space, especially in suburban market, should rebound.
So this is a great pivot point. So we've established where we are, a little bit about, where the markets are going. Let's get to a specific item, which is, some people's an elephant in the room. You don't want to talk about it too much because it's a diss at New York City, or like we're taking advantage of, of New York City's misery. And we've heard some pushback from that from our friends at the Queen's Chamber, understandably. But hey, you can't deny that if there's 10,000 change of addresses, and 4,000 in Suffolk, 6,000 in Nassau in the last 6 months, and that's on the residential side, and the last 3 months in the residential side. And then, we're looking at the commercial side. I don't know if we have numbers for that. Maybe you guys do. And there's no end in sight with this trend, whether it be the Hamptons, whether it be the border communities, the TODs. We're hearing tons of TOD activity pickups. So guys, give us your perspective on this quote exodus, and how, and there's really two parts to this question. And for time, maybe you can answer this together. One, what's happening in the different sectors with the migration from New York City to Long Island? Second, do we have the infrastructure to handle this? And what types of infrastructure do we need to invest in to plan for this growth, so it's not just happening all around us? We'll go back. Michael, let's start top of the order.
Okay. Well, we learned something with the storm. We don't have a good sustainable energy delivery system. So we really got to harden that system and avoid the blackouts, the long-term shutdowns of power. We really need to address that. And I think it's more than just the performance of PSEG or National Grid or whomever. The infrastructure itself is not good enough. It's not hardened enough. We really have to think about more underground power, more different sources of power, alternate sources of power. So if one source goes down, we have another source like wind power, solar power, other ways to keep us going. And we haven't really given a lot of thought to our water system either. We have to really improve the water delivery system. We are dealing in a lot of the water districts with contamination, but as you know, the water on Long Island is fed from wells, and we got to preserve our aquifers. We got to be more careful with how we deal with contamination in the ground to protect the water and deliver water. So I really think we need a more sustainable energy and natural resource system. And the other thing is, I think we need a much better investment in infrastructure, not just the roads, but Third Rail project is a great project. Ferry service could be a great project. It's starting in Glen Cove. I see a note, yes, bus type or rapid transit. I think carpool sharing. I think we have to get much more creative in that kind of investment to protect our future.
Thanks, Michael.
I mean,
All right.
I agree with, I'm sorry, go ahead.
Yeah, Leo, go. This is your question. So, as far as
Basically, I mean, I agree with all that, and those are real long-term type of things that have been going on, you know, for the last 30, 40 years on Long Island, all these problems, but just to get a little more immediate, you know, with the exodus in New York City and so forth. I mean, these single-family homes, I mean, you know, I don't have numbers on it, but anecdotally, I mean, a lot of people are moving off the island too. So when they sell their house, they generally, I mean, I could say I don't have data on this, but there is a portion of them moving off the island, not just trading up or buying a new house.
right.
So you're seeing some of that. So not even clear on the population increase or if there's any data on that. But you know, there's only so much land here, so it's not like there's a ton of new construction. I mean, there are a fair amount of apartments being built, but not really too much single family. So as far as the population increase and an immediate strain on the infrastructure and everything, I don't, you know, really know how that would play out at the moment. But, you know, it's been an ongoing issue on Long Island, you know, bury the utility lines, mass transit, so forth. So, you know, those things are just always hanging out there.
It's an interesting time to talk about investment in infrastructure when, you know, the MTA has a multi-billion-dollar budget hole for now, you know, and you're looking at rate increases, you're looking at service cuts, you might look at station closures if there's not some federal investment or some other revenue stream. So it's kind of wild to talk forward, and then also while we're in this crisis moment, hopefully folks come together to kind of sort that out, maybe after the election, who knows. But as I just said all this negative stuff, I'm going to go to our most positive panelist, David Shorenstein. You know, you're investing out here, you're seeing to the sexes, you say New York City's going down, Long Island's going up. Give us your perspective on this kind of shift, whether it's temporary, and what infrastructure is needed, you know, what type of planning you want to see out here.
Well, I mean, I could talk from some personal experience. The Hamptons, that's where I am currently. I live in the city. I've lived in the city my entire life, and I've seen a tremendous influx of people relocating, at least for this year, to the Hamptons from the city. Whether, you know, the main provider will stay in the city 2-3 days a week, but most families are out here full time. Still, you know, it's hard to get reservations at restaurants. Doctor's appointments take 3 to 4 weeks. I don't think that was the case a year ago for people out here. So really, you're seeing a tremendous amount of people, main streets in the town, Southampton, Sag Harbor, Bridgehampton. It's still summertime. So that's just from personal everyday observations. And I own a few buildings out here. I just signed another, an LOI to build a self-storage facility that Michael's firm is actually representing us on. So
Thank you, David. I appreciate that. David's a really valued client. I didn't want to like mix apples and oranges, but thank you so much.
Doing a great job, but it's hot out here. And I think this is not going to be just for 1 year. I think a lot of people are going to change their mentality about cities. And while what's going on is in the city, some people are going to want to change their lives. And I think just living the Hamptons, it's a great life. I've seen it for the last 2 to 3 years. People have started moving out here. You would say 3 years ago, you're living where? But now I think it's going to be more and more every year. And as for the infrastructure, I mean, I think there'll need to be more healthcare there, and I've seen a steady stream of healthcare facilities being built in the Hamptons, luckily. But I think there'll need to be more, and you know, the barrier to entry to get restaurants in is nearly impossible. So I don't know how that's going to work. You know, they need to do the sewer system in Southampton. And ever since I've been here for the last 4 or 5 years, they've been talking about it. I don't think anything's really changed. So, more restaurants, more healthcare, but leave that up to the government.
Thanks, David. And this is actually a good conversation, a good time to pivot into another question. Before I do that, I see a couple questions in the chat, but obviously, guys, feel free to network in the chat, even though we can't see your face. Get yourselves in the chat, number one. Number two, get us questions, because we have two more for these guys, and then we want to hear from you and get some questions from you guys in on this. But I think I'd pivot by saying, there's a village elections last night, and just about every candidate, which has happened for multiple years now, every candidate that runs on a downtown revitalization platform wins. And that happened again last night. And it's happened for multiple years now, where, local folks, despite the NIMBY moniker we all get thrown at regionally by our regional press and everybody who just, folks who wring their hands and say everybody's negative. Downtown projects are supported, TOD projects are supported, and other projects too, as long as the developers actually work with the local community, which doesn't always happen, but when it does, generally goes well. Difficult, but you can get to a yes. So we've seen the villages now are supporting some of these things. The question really is now, there's this overarching challenge of greenhouse gases and climate change and floodplain issues and kind of broader state and regional and county planning overlaying on local government that kind of constrains growth. And as folks from New York City coming out here, there's going to be a lot of fears. There'll be a renewed movement to kind of be anti-growth to a certain degree. How do we reconcile this? How do we look at, growth in this context, post-coronavirus? And this was Michael's question. I'm sure he's got some thoughts on this, but just to kick it off quickly, and then we'll get to some audience questions. But climate change, how are we handling this out here, Michael?
Well, that's the point. I think we're not really handling it. And I've been watching that issue for a long time. We have to realize it's a fact. It's here. We have to deal with rising sea levels. If you follow, there was a proposal that the Army Corps of Engineers sort of tabled where they were going to put floodgates around the area of the Throgs Neck Bridge to keep waters from flooding into the New York City, Manhattan area. And that would have pushed those waters onto Long Island. So the Army Corps dropped that for now, but both Manhattan, New York City, and Long Island have to realize that we're going to have rising sea levels. We're going to have more severe storms. We could easily have more Sandy type storms. We're going to have erosion on the shorelines. It's going to impact the infrastructure along the shorelines and disrupt transportation. So I think we have to take a real hard look at new building codes so that the buildings we have and that we put up are sustainable in these big storm events. We have to harden our shorelines. We have to think about new conservation areas around the shorelines and also inland, because those kinds of events are going to affect water supply and our wetlands. We have a lot of wetlands on Long Island. We have a lot of underground streams, and we really have to engage technology, I think. We haven't really used enough technology to project what's going to happen in the future and then model what we need to do now. So
Thanks,
that's
Michael.
my overall view of it.
No, it's great. It's great. Leo, David, either of you guys want to jump in on this one?
Sure. I mean, as far as climate change affecting
Yep,
Long Island,
growth on the island.
I think we need a long-term, international plan to reduce the carbon emissions and, try to mitigate that, and not just, with all due respect to Michael, not just reacting to it, but trying to prevent it. Would probably be a good thing.
I agree with you, Leo. By the way, I agree. That's a big component.
On an international level, but in the meantime, I agree with Michael that we need to, mitigate it as much as possible for everyone's interests.
I mean, one thing that should be known is, most municipalities in Long Island have signed on to the Climate Smart Communities program. So there's a New York
Yeah.
State set of climate change protocols. So there is planning being done, number one. Number two, through this coronavirus crisis, there's been more people walking and biking, getting out of their vehicles, reduction of vehicle miles traveled, VMTs. So all that bodes well as well. And I think you're going to see a spirit of people and keep that energy going, both for health, both for just social connection to the community, just getting out of the damn house, So I think, I think you're seeing that. So yeah, hey, let's pivot to a couple other questions, but maybe we get some questions in the chat. One question that this is kind of a curveball for everybody, but this has come up. I'm looking at a screen. There's 6 white guys here. Nothing wrong with white guys, I'm one, but how do we, this nation's gone through a racial challenge, and a series of divisions. How do we really, and we found this during the outreach for the PPP lending program for small businesses. The minority businesses were just not connected to, we aren't communicating the way we can to, minority Hispanic. We worked with the Hispanic Chamber, the African American Chamber, Peruvian Chamber, Colombian Chamber, try to work with all these guys. And information doesn't get out as quick. There's not as many folks in a lot of these forums, including our own division, and we've had to work doubly hard, triply hard to really increase our minority participation and build good relationships. How are we doing with that? Are we, is the real estate industry looking into that? Are we getting a little more diverse in some of the things that we're doing, in our deals? Just throwing it out. And I'm not trying to torment anyone, but just throwing the question out because I think it's timely.
I mean, I would say, we're very cognizant of it, and, obviously we're not racist at all, and I'd love to hire, minorities. We have a few here, and, it's big problem, big issue. So,
Yep.
but, I just think if everyone works together and tries to solve it somehow, but, we are cognizant of it and are proactive in, like I said, our recruiting and hiring. I mean, and, I don't know what the solution is on a large scale, but it's going on a long time, and definitely need to be honest about it and really what's really going on, and come up with some meaningful solutions.
Yeah, cool. Rick?
Yeah, one of the things when you're talking about racial divide or whatever, I put on quite a few of these events. I am trying to reach out to companies of different nationalities and different races to participate. I think if they were more proactive in reaching out to companies like myself, we would embrace it. We'd love to have them participate in this, especially at this time.
Yeah. Well, there's some bridge building that's got to happen for sure. I mean, because there's clearly there's folks out there, there's businesses that are, minority women-owned businesses that are very, active in various networks, professional networks too. It's kind of, we've got to kind of break some bridges down. So I see that. I didn't mean to torment everyone. This wasn't a white guilt thing, or a white privilege thing or whatever. It's just a challenge in the industry, and a lot of different industries, is trying to get that diversity going. So I was just curious where people.
I'm just going to say, Eric, I totally agree with you. But, my observation, at least from the perspective of our firm, we're very engaged with clients from a whole diverse background in all the different economic sectors, whether it's healthcare, pharmaceutical, banking, real estate, you name it. And I see the demographics changing, and I see that type of people who are driving our economy are now on Long Island, New York City, Westchester, are coming from diverse areas. I do think they need, and we need, all of us mutually, more engagement among us. But I see a great change happening, and it's best for all of us in the long run.
No, I gotta say, and I say this in a positive tip, you know, a lot of our downtowns have some of the most diverse small business spaces. And, you know, certainly see it through the restaurants, you know, and, you know, it's phenomenal. It's like a slice of life. And, you know, we found through the PPP outreach that a lot of folks didn't know about these programs. I mean, it was frightening. We called every single business or knocked on doors, 5 business districts, and no one had reached out to some of these folks. It was like crazy, you know. So I know that's not the challenge of the burden of the folks here, but I just think it's cognizant that we got to work on making those connections. Let's get to a question in the chat. Rich Newman's got one about cost of construction. You know, how's the pandemic affected the cost of construction? They thought it'd be a cost save, but they have a senior living complex that was hit with a big change order on lumber. You know, where are folks at with some of these hard costs? Folks seeing?
David's a developer, so he probably know more than me, but
I mean,
I can say,
started many developments. I mean, I haven't really seen, from what I'm hearing, costs skyrocketing because of any changes. I mean, the costs are, I've seen everything kind of stay the same. You know, no one's really price gouging because of COVID or anything like that.
I mean, I think with people staying home and doing renovations, and you know, there's been quite a bit of commercial building. I mean, I know the owner of All County Block in Holbrook, and he's, you know, basically Cambridge can't make pavers quick enough, and they're rationing them to all the dealers. And you know, again, anecdotally, I hear that, you know, they're supply and demand shortages, and you know, that's going to eventually drive up the pricing. But I'm not a builder, so I don't know directly.
Okay, guys. All right, so we're going to get to closing comments in a few minutes, but we want to take a couple questions. One question that we had was about, you know, everyone's talking, what's going on with the Nassau Hub? You know, all kinds of changes, right? So, but we hear it's back on track. RXR is still committed to the deal. Nassau County is still managing their plans, and the town of Hempstead is still engaged with looking to approve a project there and not being negative or NIMBY. But I'm going to toss this over to Michael. Michael, you get some take on this? You're right there.
Well, I look at it on it every day. I saw the Coliseum when it was being renovated after the Islanders announced they were going to leave. I see it as, again, an unbelievably great opportunity. And I think we have some entities now and people that are engaged to create something very unique. Again, I think a venue for different kinds of conventions. I see that the new owner is thinking about a music venue. I also see potential for a new, really high-class hotel. And as I look at on one side, and I see the Coliseum, and then I see Hofstra and healthcare facilities, I just think it's a great opportunity to merge all of those uses together with housing and new transportation, and be a driver for the central part of Nassau County, as well as all of Long Island. So we haven't really paid a lot of attention to it, but I think in the next couple of years, it's going to come online as a big, big economic driver.
Great. I realized that there's a question to chat also here on local manufacturing. I didn't realize this was a question. So, you know, I think through the, you know, everybody had heard about, you know, you can't get face masks, you know, you got to get them from China. You know, how do we get local manufacturing supply chains close to home? Are there ways that we're thinking about this? You know, accessing real estate, obviously industrial's doing well, but what are some things that can be done locally? Maybe just regulatory systems, or incentives? Any thoughts?
I'm sorry, what was the question?
How to
I zoned
boost
out
local
there.
manufacturing so supply chains are closer to home. You know, I think that was clearly a challenge through coronavirus on certain health.
Yeah, I mean, I get, yeah, it's tax incentives. I mean, mainly economic incentives.
Right.
There's a lot of manufacturers on Long Island, believe it or not. You know,
There is a
1,000
consortium, yeah, that they're working on this kind of stuff.
I mean, there's still a lot of manufacturing here, so it's, you know, additional incentives, you know, real estate tax incentives, economic incentives, and so forth. But it's pretty robust from what I see, and very diversified.
Yeah, I think there's a group, Ignite Long Island, that works on some of this stuff. They're a great resource. I just want to answer the question in the chat. All right, so we're closing in here on final comments.
let
This
me
has been
just-
great so far. Rick, go.
Yeah, I just want to ask David a question. You were talking about some of the smaller retail spots that you. What do you think about the downtown areas in a lot of cities that are around the country? A lot of the downtown shopping areas kind of were falling apart, pretty much. They were going away because people weren't doing and they're shopping in the local downtown area. So the small shops weren't getting the support they needed. Do you think that since this pandemic has started, that's going to give that growth for shopping and restaurants and things like that for more localized?
I mean, I think every single town is different. You got to really analyze what's going on in each specific place. I mean, if I have a building in Massapequa, how different is that than some of the other towns in Nassau? I just think it's like how close you are to the train, how close you are, like you said, how walkable is the area. You know, what kind of other stores are there? Who are the other owners of the building? Everything is so, at least the way I look at everything, is so case specific. You got to be extremely careful. But I do think in the right areas, with the right asset, you're going to fill those spaces quickly, and there is demand. I mean, it's just I mean, I guess in my own personal experience, everything that I've bought, there's always been someone to try or attempt. You know, maybe they couldn't get the funds together, but there was always activity. People want to do things in the good emerging towns. People are trying.
Yeah, that's a great comment, David. I would say that's what we've been seeing, Rick. I mean, honestly, before coronavirus, we had the reverse problem. We had our downtowns were really on the upswing, and coronavirus regulations have really hurt a lot of our downtown businesses. We've got 45 downtowns with revitalization plans and projects. So on Long Island, so all various stages, though, as David said, is very localized economics. So I wouldn't see it as a negative to start the corner. You know, the challenge now is how do we come out of this? But anyway, I don't want to go on and on. Let's get closing comments from everybody. I know we got a minute each if we want to stick to time. So, Michael, what do you got to close us out?
Well, I think it's been a great discussion. Again, I'm really glad to have participated. I see in the chat room there's a lot of really good questions. We could probably go on for a long time. But I'm going to go back to what I expressed at the very beginning, which is I see now a great opportunity. We should take everything that we're facing with COVID, the pandemic, climate change, energy problems, and really put it in a big hopper and start thinking creatively, innovatively, and in different ways so we can sustain our future. If we just think, well, we're going to go back to what it was, that's not going to happen. And I really think we can make some great changes. We have so many talented people, so many smart people here that we can do something very special if we all put our minds to it. So I'm glad to be part of that group.
Great stuff, Michael. Thanks for being forward thinking in that regard. Leo, what help us close out?
Well, I agree with Michael, and thank you all. It was thank you for inviting me. It was a great discussion. I appreciate it, and you know, I'm bullish on Long Island. I think you know, we're going to go onward and upward and solve our problems and continue to be a great place to live. I think we'll get this COVID behind us with a vaccine and get through the winter, and the spring of 2021 should be awesome. So just gonna grind through it and keep going and see how it plays out. Thank you all.
Thank you, Leo. And David, first off, thanks for investing on Long Island. And but yeah, help us close out. What's your take moving forward?
We just also want to thank everyone. Thank you for having me. Really appreciate it. I think it was a great chat. I think we could go on for hours and hours, and it's really wonderful discussion. I just think Suffolk County, especially, future is extremely bright. Influx of people, great schools, great way of life, great for kids. I just think there's massive amounts of untapped potential and opportunity. It just comes down to the municipalities and local governments, how hard the regulations are to really, you know, unlock that value. Because, like Michael said, there are a lot of smart people. A lot of smart people are going to be out here with big ideas. It's just, how do you accomplish those goals? And I know I'm going to be working every day to accomplish those goals. So, and learning every day, I learn something new. So.
That's right. That's right. No, I learned a lot today. This is great, David. Thank you. I mean, I just, my 2 cents, you know, right now our downtowns, we were talking a little bit about, our movie theaters need to come back. Our live theaters need to come back. Indoor dining, for the folks to make it through the winter, they got to get past 50% capacity. They got to get to 75, what we're hearing. So we got to do some regulatory advocacy in that front. Some other regulatory advocacy is, you know, folks talk about building projects. We got to have, you know, Suffolk Health Department, Fire Marshal, others, building departments move quicker. We also need to loosen some of the regulations on, you know, on existing businesses, which is painful right now. And we got to increase some corporate philanthropy. You know, people need help. And if you have resources, get them on the street any way you can. And the last thing we can all do is shop local. So, you know, I tell everyone, yeah, there's an election choice. There's a choice. It's not political. There's a choice this winter, and it's to help our local independent small businesses or not. And it really depends on the future you want here, because if you care about places, you know, on Long Island, you got to invest in them, and we all can do that. So with that, thank you guys for being part of this discussion. I've learned a lot of notes here. I'm going to toss it over to Rick. Rick, thank you for putting us all together, and all the audience members too, participating.
Thank you.
Hey, Eric, I want to thank you. Eric always does a phenomenal job moderating. We think you do fantastic putting, you know, connecting everyone. And I also like to thank everyone for putting their information in the chat boxes, because like Eric was saying, the communication among all of us is so important at this time. And I think if we all start participating in a joint venture here to pull us out of this, I think we'll come through this just fine. I was so happy to hear so many positive things during this conversation. That gives us all that an uplift for the rest of the 2020 season. So going forward, we see the light. I'm feeling it. I want to thank our sponsors for today: Yadi, Kalka, FIA Capital Partners, Sanwood Kashignano, and US.
You're getting there.
I'm getting closer
You're
and closer
good.
every year, Michael. I'm getting a little better. But I want to thank Eric again. I also want to thank the panel. And I know if you could see everyone at home, I'm sure they're standing and applauding right now because you all did an excellent job. Thank you for watching today's interview. If you'd like to be a guest, a sponsor, or even advertise in the New England Real Estate Journal, you'll find our contact information in the description box below. You can also find all our social media platforms so you can follow us, and please subscribe to our YouTube channel.